What a wild start to 2026 for the Indian stock market. I mean, it's been a dramatic push and pull, a real high-stakes tug-of-war between some powerful global headwinds and a surprisingly strong domestic force. What we've really been seeing is a market that's just on edge, jumping at every single headline and every rumor.
And if you want to get a sense of just how volatile it's been, just look at this number. In only the first 6 trading days of the new year, a jaw-dropping 18.5 lakh crore was wiped from investor wealth. That's not a typo. That's a massive shock to the system that has set a very, very tense stage for the rest of the year.
And believe me, this was not just some minor blip on the radar. People inside the market were calling it one of the most unsettling starts to a year in a long, long time. You know, all that confidence that people had coming into 2026, it got shaken pretty hard. It left everybody asking the same 2 questions. What on earth just happened, and where do we go from here?
Okay, so here's how we're going to break this all down. First, we'll look at that brutal sell-off itself. Then, we'll unpack the 2 big opposing forces, the global fears that were pulling the market down, and then the powerful force that was pushing back, what some are calling the Great Indian Shield. After that, we'll zoom right in on the last 48 hours to see this tug-of-war in real time. And finally, we'll look ahead at what you need to be watching for next.
So the year really just kicked off with a storm, didn't it? I mean, everyone was hoping for a bit of stability after a pretty rocky 2025, but instead, bam! The market got hit with this intense wave of selling that basically wiped out months of gains in just a few days.
What's absolutely mind-boggling here is just how fast this all happened. Think about it. On January 2nd, the Nifty hits a brand new high. Everyone's celebrating. And then, it's like a switch flipped. In just the first 5 days, a staggering 9 lakh crore of investor wealth just vanished. The selling got even worse, and by the morning of January 12th, the Nifty was pushed below that crucial 25,500 level. All told, the Sensex fell over 2,900 points from its peak. It was absolutely brutal. So the big question is, why? What caused this massive panic? Well, the main force dragging everything down was coming from outside India. It was this perfect storm of geopolitical tensions and trade worries that created what traders call a classic risk-off environment. Now, that's just a fancy way of saying that the big international investors got spooked and they started pulling their money out of things they see as risky, like stocks, and ran for cover in safer stuff like gold or bonds.
And look, it wasn't just one single thing. It was a whole cocktail of problems. You had renewed tariff threats from the US hanging over India's oil imports. Then you had these huge new sanctions on Iran, creating massive uncertainty. Add to that all the other geopolitical jitters and the fact that the big India-US trade deal is still stalled. So what was the result? The big global players, the foreign institutional investors, or FIIs, they started selling Indian stocks, and that created this intense, persistent downward pressure.
But, and this is where the story gets really interesting, while all that foreign money was heading for the exits, an equally powerful force inside India was pushing right back. And this really has become the defining story of the Indian market lately, the incredible rise of the domestic investor.
This buildup of local support is what created that classic market tug-of-war we've been talking about. You had foreign sellers on one end of the rope and domestic buyers on the other, and you could see this dynamic play out crystal clear, especially when the selling was at its worst.
And this chart just illustrates it perfectly. Check out these numbers from January 12th, the day of that huge intraday comeback. Foreign institutions sold a net of over 3,600 crore rupees, a huge outflow. But look at the other side. Our domestic institutional investors, we're talking mutual funds, insurance companies, they bought a net of almost 5,900 crore. They didn't just absorb all that selling, they bought even more, providing this massive cushion for the market.
And this isn't just a fluke. It's a fundamental shift that's been building for years. It's all thanks to the steady, consistent flow of money from millions of retail investors through their SIPs. That gives our domestic funds predictable, immense buying power. It's created what analysts are now calling a domestic shield, a buffer that helps stabilize the market against the kinds of global shocks that, in the past, might have caused a much deeper crash. It is a total game changer.
Okay, so now let's zoom right in on just the last 48 hours to see how this tug-of-war has been playing out. Because the difference between what happened yesterday and what happened today gives us a perfect snapshot of just how fragile and news-driven the market is right now.
So yesterday, January 12th, was all about a rebound built on hope. The market was down big in the morning, and then it staged this massive recovery. Why?
Well, it was apparently sparked by some reassuring comments from the new U.S. ambassador that kind of eased those tariff fears. But today, January 13th, was a totally different story. The market tried to go up, but it just couldn't hold on. The mood shifted to profit booking and caution, which just goes to show how quickly sentiment can turn on a dime.
And the numbers tell the whole story. Yesterday, the Nifty closed up. Today, it closed down, finishing at 25,732. The whole narrative switched from a broad recovery to something analysts call consolidation. That just means the market is kind of treading water, trying to figure out what's next. We saw some sectors, like IT and banking, do okay today, but then others, like consumer durables, realty, and pharma, dragged the whole thing down. It signals that investors aren't broadly confident. They're being very selective and just taking profits where they can.
So, with the market stuck in this really delicate balance, that's the big question, right? Where do we go from here? Let's take a look at the key technical levels, the big events on the calendar, and what the experts are saying will likely determine the market's next big move.
All right, from a technical perspective, the sell-off definitely left a mark. What you're looking at here is the daily chart of the Nifty. See those squiggly lines? They're called moving averages, and they basically just show the average price trend. The key thing to notice is that the price has dropped below those lines. For chart analysts, that's a classic warning sign, a bearish pattern, suggesting that the upward momentum has stalled, at least for now. And that leads us to the key battleground levels that analysts are now totally focused on. On the downside, you've got the 25,600 to 25,500 zone. That's critical support. It's like the floor. That's where buyers need to step in. If the market breaks below that, the selling could pick up speed. On the upside, you have the resistance, or the ceiling, up around 25,900 to 26,000. We need a strong, decisive move above that ceiling to feel like the bulls are really back in control. And there are several huge events on the horizon that could easily push the market through one of those levels. First, and most immediate, is a landmark verdict from the U.S. Supreme Court on the legality of those tariffs, and that's expected tonight. That could be a massive market mover. Beyond that, we're heading into Q3 earnings season, so we'll get a real look at how Indian companies are doing. There's also key U.S. economic data coming up, and of course, we'll keep watching that daily tug-of-war between the FIIs and DIIs.
Given all this uncertainty, the advice from experts is pretty clear. Be cautious. Take this quote from Shrikant Chauhan of Kotak Securities. He's basically saying the strategy should be to sell when the market rallies up near that key resistance zone of 25,900 to 26,000. It shows the feeling that any upward moves are probably temporary until we get more clarity. The focus right now is on managing risk, not on aggressive buying.
And that brings us to the final crucial question. We've seen this powerful wave of foreign selling driven by global fears, and we've also seen this incredible domestic shield pushing back. With major events right on the horizon, the market is truly at a crossroads. The big question for 2026 is going to be this: will India's growing internal strength be enough to withstand the relentless pressure from abroad? The answer to that is going to determine which side finally wins this tug of war.